Our next guest helps manage over $272 billion. That is more than the GDP of Greece. That is a big number. He is Alan Gurwitz, Chief Investment Officer at Barclays Wealth Management. We appreciate your joining us, Aaron.
Happy to be here.
You have a very intriguing way of looking at the market. Today is the perfect reason to get it. It's called behavioral finance. A lot of panic in this market in the last hour. What is behavioral finance?
Well, behavioral finance is what you get when you have psychologists who try to understand how people really make financial decisions. And in academia, what they do is they try to use that insight to predict how financial markets will behave on average over time, and they've had some success. Daniel Kahneman got the Nobel Prize in economics, a psychologist, several years ago for this work.
We were talking about your background, your educational background. You were in school for a long time. You have lots of master's degrees, a PhD, and then an undergrad also in philosophy, which is pretty amazing. Right. But how would you, if I were to describe these markets, it's sort of, you know, like lemmings. I mean, it's a flock behavior. We get one bad headline and everyone sells. And that's a behavioral phenomenon. It doesn't reflect anything rational that's going on in the markets. A rational investor figures out what their long-term objectives are, builds the portfolio that gives them the best chance of achieving that, and then sits with it. If everybody behaved that way, there wouldn't be a lot to talk about on a program like this at the end of a trading day. In fact, people do have long-term objectives, do have those in mind, but they can't help but respond one way or the other to any little bit of news. And we've seen that today. Get a little bit of bad news, we're down a lot. Get a little bit of good news on a day, and we're up a lot. Since the beginning of August, more than a third, almost 40% of the trading days have seen a move of 2% or more up or down in the S&P 500. But today, we're closing almost exactly at the same level we were at on August 2nd. Directionless volatility. It's a behavioral phenomenon. Is this a post-financial crisis phenomena because people are so afraid of what they don't know right now?
I certainly hope it's a post-financial crisis phenomenon rather than a pre-financial crisis phenomenon. But it's not just lingering anxiety coming out of the downturn in 08 and 09. We do have a real problem in Europe. I think policymakers in Europe will be able to handle it, continue muddling through, avoid a disaster, eventually solve the problem a long time from now. But there's that lingering risk that this could collapse into another disaster. And as long as that's on the table, I think we're going to see days like today and even more dramatic.
Bottom line, you're in the money management business. So we can talk about all this stuff, but then we actually have to put it to work. What are you buying? What's on the shopping list? Or what are you selling?
Well, again, it depends on each investor's psychology and each investor's behavioral dimension, and we give different advice to different investors. But if somebody comes to me today and says, what opportunities are there? The opportunity I see is taking advantage of this directionless volatility. I don't think this problem is going to disappear.
So, in other words, you sell calls on stocks you're long.
Sell options. I want to sell options and get paid for volatility. Selling calls on stocks that I own.
So if the stocks trade up, you pocket the premium. Or if they stay still, you pocket the premium. If they go up, you get both.
Yeah, and I'm getting paid a lot for that call option now because volatility is so.
And you also want to sell puts, though.
If I have cash and I thought, hey, maybe I'd like to buy this stock if it's down a little bit, consider writing a put on it. You'll get paid a lot for doing something that you might want to do anyway.
So find a shopping list of stocks you like. You'll be willing to buy them lower. You write a put, which means you're forced to become a buyer at a lower price. That's what you're talking about.
Options are not for everybody. They require sophistication and risk tolerance. But for investors that would consider doing that, there's no time like now to be thinking about that kind of strategy.
All right. Aaron Gurwitz, the CIO of Barclays Wealth Capital. We appreciate your joining us.